Hey everybody, Smart Silver Stacker here. I hope you're doing well. Happy New Year to all of you stackers out there. Of course, 2024 was a very interesting year in the silver market. You can see here from this chart generated on January 1st that silver finished 2024 up more than 22%. So a good year for silver, but that did represent a significant pullback from the highs of 2024. So I want to talk briefly about the pullback that we got in the spot price of gold and silver at the end of 2024, some of the factors that were driving that, and how they relate to where silver will be headed as we watch 2025, the new year, play out. I do think that one of the best gifts we were given over the holiday season this year was the pullback that we got in the spot price of gold and silver, because it gave us stackers an opportunity to acquire more metal at a discount. I myself just recently added some more US 90% junk silver from SD Bullion, so I'll have an unboxing video of that for you soon. They've got a sale right now on junk silver, and I do still view these coins as perhaps the best form of physical silver for stackers to acquire in the current environment. Now, let's start off today's video by examining this chart of the US dollar index, because this is one of the biggest contributing factors to the pullback that we saw in the spot price of gold and the spot price of silver towards the end of 2024. So the US dollar index, you got to keep in mind, this is not necessarily an absolute measure of purchasing power of the US dollar. If you've been to the grocery store lately, you are likely well aware of the fact that the purchasing power of the dollar continues to decline. But what this does indicate is that foreign fiat currencies are falling in value even faster than the dollar. The economic malaise is global. This is not limited to the United States. A big part of this has to do with euro weakness, the euro being eviscerated in value as the ECB continues to cut and the European economy continues to suffer as they've lost their supply of cheap Russian gas, and the German industry has been gutted as a result. And, around the world, economic malaise continues in China as well. They've announced major stimulus programs. They are likely to announce even bigger stimulus measures in the near future. That will likely put some upward pressure actually on the price of gold and silver, but this does make the US dollar rise relative to these foreign fiat currencies. Basically, it's just the healthiest patient in a terminal ward, if you will. But this increase that we saw in the US dollar index, it has to do with the economic malaise abroad. Also has to do with a couple of other factors here domestically. One being the election of Donald Trump and the economic optimism around that event. You can see here, following November 5th, we've seen a big rip in the value of the US dollar index. And part of this also has to do with comments made by Jerome Powell and the members of the FOMC at the Federal Reserve's latest FOMC meeting in December, where they outlined a more hawkish view for U.S. monetary policy moving forward in 2025. We can take a look at this CME FedWatch tool. You can see that the Fed has gotten so hawkish at this point via what they have conveyed in these press conferences and in their official notes that now, if we look at what the markets are anticipating for December 2025, some market participants are even pricing in rate hikes by that time, with 2.2% chance of higher rates, with a federal funds rate at 450 to 475. The current is 425 to 450, and more market participants view the rates as remaining unchanged, whereas the majority of market participants are pricing in either one more cut or two more cuts respectively. So this is a big change from what markets had been pricing in previously. They had thought they might get 4 or 5 rate cuts in 2025. And now it looks like the Fed is taking away the punch bowl. Now, why are they doing that? Well, it's because inflation continues to rise. Perhaps they're getting a little nervous about that. And also, some might say that they're intentionally trying to take the economy down before Trump gets into office. I mean, I don't know how true that is, although there might be something to that. Certainly, Donald Trump won't want that. And remember, he had made comments back in August of 2024 about how he said that he wanted presidents to have some say over interest rates. So it's going to be very interesting to see what happens following Trump's inauguration with interest rates. He may be exerting influence on the Federal Reserve Chair and the FOMC to ease rates. I mean, he's talked multiple times over the past year about how he wants lower interest rates and to lower the cost of credit. And that's one reason that I think that markets may be getting this wrong with this forecast of a tighter Fed. The other reason is that debts and deficits continue to soar. Here we are just a few days into the new year, and the U.S. national debt is now at $36.3 trillion, with the debts and deficits continuing to balloon. And this is for everything from expanding domestic programs, reduced tax income due to, an eviscerated economy. Perhaps nominally tax revenue might increase, but that is adjusted for inflation, a decrease. Same thing with the growing U.S. economy. Bring out all these rosy GDP statistics, but you know that they're not adjusting for inflation correctly. You talk about retail spending being up and a strong U.S. consumer, but that's not because consumers are strong. It's because they are being forced to spend more because of a debased currency. I mean, just look at this story. Credit card debt in the U.S. is now set to hit a new record level because of consumer holiday spending. And this is the type of data that they will point to indicate that the U.S. economy and the U.S. consumer are strong. But 36% of Americans went into debt this holiday season. So it is increasing expansion of the money supply that is fueling this spending, not increased wages, not increased productivity, but it's just inflation, which is giving the appearance of productivity. But the thing is that the cost of servicing all of this debt is becoming a huge problem. And so very likely, to avoid a massive recession and to avoid the wheels falling off of this debt-based economy, the Federal Reserve is going to be forced to cut rates. Now, that being said, I want to take a look at this chart of the silver price to see if we can get an idea of where silver may be headed in 2025. Because once it becomes clear to markets that the Fed will indeed be forced to cut more and ease monetary policy more, what's that going to take? I don't know. Maybe a financial crisis of some sort, maybe a debt crisis, a dollar crisis. Very likely there's going to be some event which is going to give the Fed the cover they need to print a bunch of money, because it's absolutely necessary to keep this economy going. But when that takes place, I think we could get a major bullish catalyst in the silver price. And this descending, falling wedge pattern that you see forming up in the silver price is actually a bullish one. And if we get a break above this trend line up here, so let's say a break above $30, $31 at this point, that could be a sign that we are breaking out to potentially new highs in the silver price. Now, I'm going to pull up this chart of silver futures because for whatever reason on TradingView here, I can't display volume on the silver spot chart. But one thing that confirms that this is a downward falling wedge pattern, a bullish reversal pattern, a reversal pattern that could reverse this downtrend silver's been in, is that volume is diminishing. So you see volume is trending down here as this falling wedge plays out. And if we see a break above this top trend line on increased volume, that's going to indicate that there's a very bullish catalyst for silver. Now, going back to the spot price chart, I want to pull up another indicator, the MACD, because we are seeing right now another bullish MACD cross. Now, I pointed out one of these that we saw back in December, which didn't really play out. I mean, we got a little bounce after this bullish MACD cross, but then the silver price began to drop once again. But if we go back just a little bit further, we can see a few of these other bullish MACD crosses and what they tend to indicate as a leading indicator for the silver price. You can see we got one of these MACD crosses back in August of 2024. Following that, which occurred when silver was around 28 bucks, silver then rose to just under 35. If we go back a little bit further, here's another bullish MACD cross. You can see that this took place when the silver spot price was around $22. And we all know what happened after that. The silver price rose to about $32.50 between January, when that MACD cross took place, and May of 2024. So that was a major bull signal there, and that was definitely a good buying opportunity. Here's another one from October of 2023, which occurred again when the silver price was down around 22 bucks. And between October of 2023 and December of 2023, the silver price rose from under $22 to just over 25. So this has, in previous instances, been a valid buy signal for silver. So of course, none of this is financial advice, just taking a look at some charts here and sharing my thoughts. But this is a bullish indicator. And when you combine this with the fundamentals, the propensity for the Federal Reserve to debase the dollar and markets are anticipating the Fed's going to be hawkish moving forward. I think that's creating an opportunity here. I mean, if you don't think that the Fed is going to print more money, perhaps you want to sell your silver. Again, none of this is financial advice, but if you're convinced, like I am, that the debts and deficits aren't going away, they're ultimately going to be monetized, the Federal Reserve is going to have to cut rates, and you combine that with this technical setup in silver, I think that now is probably a good time to be getting in, especially with stacking, where you have this potentially long-term holding period, and you don't have to worry too much about volatility. And also, you've got to consider the fundamentals of the silver market itself, the supply-demand dynamics, and how physical silver is running significant deficits year over year over year. I mean, we just had a 100 million ounce plus deficit in the silver market in 2024. It's probably going to get a lot worse in 2025, especially if countries like China begin launching major stimulus programs, which is going to cause more consumption of raw materials such as silver. There's really kind of a perfect storm shaping up here. So let me know what you think in the comments. Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker out.